There'll be myself, director of FinTalent. We've got Sam, who is a broker coach and has his own business, Broker Coach. And we've also got James Pitt, who is the director of Sunbear Marketing. If you just want to jump in and give us a quick intro, that'd be quite nice, quite helpful.
Go, Sam.
G'day guys, Sam Panetta, broker coach. I am a business coach specifically for mortgage brokers.
Yeah, James Pitt. I guess marketing person. I'm the weird person here that knows nothing about running a mortgage broker business, but hopefully I'll be able to provide some value from a marketing standpoint.
I second you on that. I don't really know how to run a business either, but I'm trying. So yeah, look, my introduction's a bit more of a page. So I just wanted to take the time to introduce my business and give you a rundown on who I am. So FinTalent, never heard of you. That's the first person I picked up the phone and tried to do business development to said to me. I mean, they've not heard of me because I've not been doing much at the time. But my story is that, so I first of all started recruiting bankers at Hayes. I was doing that for 2 years, working in business banking and then also lending roles. And then I got a role working internally at Loan Market Group, the aggregator. There, I was recruiting for their broker network, franchise businesses and non-franchise businesses too. Probably about 2 months into it, I'm going out to all these businesses. I'm meeting lots of young brokers or really established brokers, and I'm going, Jesus, like I think I can carve a business like this out for myself. So I sat down and thought, well, maybe I become a broker. I did a business degree in the UK, sort of enjoyed the finance aspect of it. And I spoke to my brother-in-law, who's himself a broker, and he was just like, "Why don't you leverage what you know instead of being one of 20,000? Why don't you be one of 4?" So I was like, "Yep, smart." So FinTalent gets built out in the background from there. It was supposed to be a 2 to 3 year business, but it ended up being 2 to 3 months. But that's the ride that it takes you on. So what we do is we partner with candidates and clients within financial services, specifically niche to lending. For the candidates, we operate essentially as an employment broker. So if you're looking at roles but you don't know where to start, I'll go out and find a portfolio of businesses to send you out to, and then I'll just go and engage from them in the background. With clients, it's sort of the other way around. I'm trying to tap into markets, people that I've placed into banking roles in the past, for example, that they don't really get in the same room as. So I'm trying to operate as a bit of a conduit between the banks and the broker businesses. So this is about, before we get really into it, I just want to talk about the reasons why somebody might go from banker to broker. Now, there's thousands of reasons, in my opinion. There's thousands of reasons why someone might start their own businesses. But if I put my consumer hat on, I think who wants me to get the right deal? Is it the bank or is it the broker? Think about it. There's probably people here that have been set targets to keep refinances to a minimum. What does that tell you about the way that banks operate? So what they're saying is to you there, we want people we want as little people as possible to be getting the best deal for them as possible. But moving on, these two are probably the standouts for me. Market share is obviously ever increasing, and it is a sign that people are putting their trust in the broker rather than going to the proprietary channels within the bank. And I think this figure will continue to grow and increase over the next year. Banks are panicking at the moment. If anyone's been paying attention, I know there's a few people working within banks at the moment. NAB, Westpac have invested heavily into their proprietary channels. What they've been doing is they've been going out and recruiting, headhunting. And if anyone's familiar with CBA, they seem to have a bit of a blank checkbook. So if you've got any people on LinkedIn you see that have moved from NAB, Westpac, Bank of Melbourne, wherever it might be, and they've ended up going to CBA, those guys are buying dinner and the next coffees anyway, I can tell you that. But yeah, basically they're just trying to get a bit of market share back from into the proprietary channels because they have been neglected, and it's because the broker channel is kind of taking over. Now with the autonomy and flexibility, it kind of speaks for itself. In this day and age, we're all trying to work a little bit less and enjoy life a little bit more. Now, it's not to say there's not brokers out there that are pumping out 100-hour weeks. They definitely are, but they're not doing it because they have to, because there's someone's foot on their neck. They're doing it because it's their choice and that's what they want to do. So thank you. Yeah. So another, I guess, reason I'm doing this is on the banking side, there can be a lot of mystery around what it means moving over to broker. Back in the day, maybe early 2000s, late 90s, going out and being a broker meant going out and being a commissions broker, going and being self-employed. Like, I'm an advocate of doing that. If you've got the minerals and you believe in yourself, go out and do it because you can make a lot more money. Sam will tell you that himself. But if it's not where you're at the moment, you've got things going on outside of work. I get it. It's expensive, but you want to get on the broker side. There are other options. So the myth: brokers only get paid in commission. It's not true. There are businesses out there that are paying a salary just like the banks do, and there are businesses out there with huge loan books that can afford to do it. Yeah, so look, there's, like I said, tons of well-structured businesses that have, really big loan books that can actually go out and do that. Now, on the compliance side as well, brokers are actually scrutinized a lot more heavier in the industry than the banks are. For example, best interest duty is not something that bankers have to abide by. They have their 4 products or 5 products that they can kind of sell to, whereas with the broker channel, they are bound by best interest duty. And what that means is really they've got to be acting in the best interest of the customer. Now, what that actually looks like from a day to day, every conversation, every bit of work that's being done from a broker is lodged in the CRM, and that's where they do their bid notes for compliance reviews. Brokers are a threat to bankers' jobs. So this is not exactly true, of course. Without the banks, the brokers aren't making money because they're not the ones who can lend the money. Brokers are not a threat to bankers' jobs. I think that what could be a potential threat to bankers' jobs is AI or offshoring. These are the things that are really gonna, could take the jobs of certain types of bankers. Look, if you're on the front line lending, no matter what you're doing, I think it's fair to say that you're safe. We're in a country where connection is the most important thing. AI is never going to replace Australia, but yeah, perfect. So I'm going to get into some pros and some cons. As you can see the list there, I'll just talk to each one of them individually. So diverse loan options is definitely a big one. Access to multiple lenders, multiple policies that allow you to provide a really tailored solution. There's been plenty of times I can imagine where some of you have had to, go and give a backdoor deal to one of your mates at the other bank or something because you don't have anywhere for it to sit with your client. As a broker, you don't have to do that. There's always somewhere for him to go. There's definitely higher earning potential as well. If you put the work in, you can make more money. Simple as that. If you're doing 70-hour weeks, 80-hour weeks in the banks, you might end up with 125 mil or something in drawdowns, but you can only get a set amount of bonus. If you're doing that as a broker, you can make uncapped commissions. There's definitely more flexibility when it comes to the broker channel as well. What I mean by flexibility is not just, you're working 3 days in the office, 2 days at home. It's you can work on your own schedule and on your own clock. That's probably one of the big things that brokers like to do is, if they can take a holiday where they're not actually not working, they're still getting stuff done, but they're able to kind of work on their own sort of clock. It's more of a client-centric role, if you ask me, being a broker. The value of your business is the relationship and the book. As a banker, you can just churn people out year on year, still get your drawdowns, but you're not going to have that relationship with people. There's definitely one thing I get when I speak to bankers as well is that there's limited skill growth because they're funneled or siloed into doing one specific type of lending. So I spoke to a guy yesterday, 7 years in equipment finance. He loves it and it's what he wants to do. But there's millions of people who don't enjoy it and want to get into something else, and you are siloed within the bank. It definitely gives you on the other side a bit more of an entrepreneurial kick as well. Working within a business, somebody that can mentor you, show you what it's like to run a business and show you how much money really can be made. It will give you that entrepreneurial kick. On the con side of things, it is fair to say that there could be at the start reduced earning stability. You have got a salary, for example. Even if you take a salaried role as a broker, until you get really running off the ground, you've got that loan book churning out. It can be a bit of a, there can be a bit of less stability there. You are going to probably see a limited client base as well. You don't now have the branding of the bank. You just have your own personal branding, and that's where James will kind of come in later and show you how to position yourself. It can be hard stepping away from a big brand, but one thing I've always coached people and said to people is that people stay for you. The longer you're there, the stuff in the background, which is NAB, Westpac, whatever it is, kind of goes away. Those people follow you because they like your service. People deal with people. They don't deal with entities. Stepping out when you've got one specific process in place, you know, and I've seen the NAB systems, I've seen the Westpac systems, they're dated. You know, a lot of people that have been using them for 15 years, like you're stuck in that process. It can be hard stepping out and doing something completely different, especially where, you know, there is a bit more of a heavier reliance on doing the compliance side of things as well. Um, Variable workload is another thing that I want to touch on. So, you know, brokers need to work irregular hours. Yeah, that's not to say they're not working, you know, big long hours of the week, but sometimes they have to work irregular hours. You get a deal on your desk on Friday, you know, it's not like in the bank, you know, where they're not going to die over the weekend. You need to get it done. Like that's the way I operate with my business as well. Um, yeah, there's lots of support. Obviously, when you're in a bank, you've got lots of different operations that are going on there. Instead, you're moving into something that is completely niched. So if you are wanting to do it, I think you need to sit down and make that decision. I speak to people that are placed in junior roles that end up going back and doing fraud analysis or something like that in a bank. So if lending's where your passion is, I would put some thought into it because you know it's a great space to play in. Yeah, and again back to those brand recognition challenges. It's having that big brand behind you versus going out and being at the forefront and doing it yourself. So next, I want to touch on some, and this is not every single structure that's out there, and this one's more of a visual aid for you to look at, but this just gives you an overview of the way some businesses operate. Broker businesses operate in very, very different ways where they want to. So, for example, this has a principal broker and an owner. Underneath that model, there's salaried brokers, loan processors, and admin and customer support. So the salaried brokers will be the ones that are bringing in the leads or converting the leads. The processors are ones that are handling everything through to settlement. And then you get your admin and customer support who are sort of there, you know, for the clients on the way through. With this one, you know, this is a partnership with two brokers. Under that business, there's two teams, you know, with brokers in it. You know, there could be salaried comms, and then they all feed into the same loan processor output. Yeah, I mean, like I said, I'm just sharing this to give examples. This is not the way that every business is structured. Yeah, on to the next one. So this is where we're going to look at some of the stuff that Sam puts in place. And I've put some videos there just for us to kind of have a listen to. Sam, feel free to cover your ears.
This is my 40-second take on how brokers build a lead getting machine. Let's go. First off, we start with the organic lead flow that everybody knows and loves. We earn organic lead flow by delivering a 5-star experience to our clients and to our partners. These leads come in the form of repeat business, client referrals, and partner referrals. Next up, we have synthetic lead flow. Synthetic lead flow comes from investing either time, money, or a combination of both. Where we allocate our energy here is largely dictated by the client niche that we work with and the character of the broker themselves. The aim of synthetic marketing is to attract new clients and new partners into our universe. This gives us the opportunity to deliver a 5-star experience, which turns into more organic lead flow. 8 ways you can niche down in your mortgage business and one example of how it works. Number 1, demographics, age, sex, household formation. Number 2, geographics, Australia-wide, overseas, state-based, city-based, suburb-based. Number 3, industry, medico, construction, law. Number 4, deal type, first home buyers, refinances, invest. Number 5, property type, residential, commercial, rural, house and land, vacant land. Number 6, borrower types, businesses, individuals, SMSFs. Number 7, job type, self-employed, PAYG, contractor, business owner. Number 8, interests, hobbies, culture. Putting together all of that for one example, first home buyers are individuals, PAYG jobs between 25 and 45 years old, married in Sydney, buying residential real estate. These are the 4 KPIs that all brokers must track, and I will give you a bonus too if you stick around to the end. So to begin, we start with leads. That is name, contact information, and the intent to do business. Number 2 is strategies. That's when we have put together the options for the client, presented it to them, and gotten a yes, please proceed. Number 3 is lodgements. That's when we have packaged an application for the bank and hit the submit button. Number 4 is everybody's favorite. When the client wins and the broker wins, it is the settlements. Now, for the bonus 2 KPIs. Number 1, conversion rates. These are largely dictated by the sort of lead getting machine that you have built, the sort of marketing strategies that you use. Number 2 is loan size, which is largely dictated by the sort of clients that you have.
Thank you, Sam. So now we're going to touch on the referral relationships and how they kind of come into the businesses. So look, there are some challenges that people might face when they're doing it, you know. But yeah, the good ways to do it are, you know, sort of communicating regularly. this is how you kind of keep that that relationship there. You know, you want to schedule check-ins with these referral partners. You want to discuss mutual progress because a lot of the time all the time it's their clients. Address any issues and share updates on the referrals without, you know, compromising that confidentiality. You want to aim to try and deliver consistent quality. So every referred client receives high quality service because it reflects on the referrer as well. You know, a positive experience is gonna encourage that relationship to flourish, and it's only going to get more leads coming down the track. Um, you know, if there's something that comes through from a financial planner or an accountant, some of the stuff I hear sometimes is that they're not super pre-qualified leads because they're not lenders, right? So what you want to do is you want to be very transparent and you want to clearly outline how the referrals are going to get managed. You know, if there's any financial arrangements, you know, you have to disclose them to the customers, follow-ups and stuff like that. Um, Reciprocate as well. So this is, you know, whilst there is a fee that's always involved for a referral relationship, you don't just want it to be a one-way street in terms of business. So you don't just want it to be solely to do with that. If you ever speak to clients that are in the market, for example, for an accountant or a real estate agent, refer that business back to them. Keep that sort of healthy source and that channel coming that way. Um, yeah, and I guess like, you know, providing these partners with resources, simple guides and stuff that they have that will help them easily identify leads. So, you know, you could build something for your business or something that they can kind of have in front of them that you know shows them what a lead could look like. If you're partnering as well, a big thing you will see is big firms partnering with developers or big home building firms leverage that joint marketing opportunity because, you know, if you get people in the door in an open home, for example, you got someone sat there, you have that opportunity to really drill that lead flow. And it's about really as well maintaining that professionalism and boundaries. Like, you know, don't cross professional boundaries with some of the referral relationships, creating conflicts of interest. Like if it's a client that's been referred to you, you know, just sort of keep it within that referral until the next one comes through, and always provide and sort of look after the client's best interests. So next, what we're going to do is we're going to touch back on the marketing aspect and sort of positioning yourself in the market when you are stepping away from being a broker, being a banker. And James is going to step in and help me out on that one.
Yeah, thanks, mate. So as I mentioned, are you hearing me okay? Thumbs up, all good? Yeah. So obviously, as I mentioned, my background is not from banking or broking. It's actually in marketing and lead generation, but I've actually been fortunate enough over the past kind of 4 months or so to help over 20 brokers market their services. And look, 80% of them are actually from banking. So it's obviously a very common trajectory. And one of the biggest challenges new brokers can face, I guess, regardless of where you come from, is just competing in the market, all right, with everyone fighting for attention these days. So this is really true in any industry, but it's something that you should definitely keep top of mind. And I think for new brokers, there's so much to think about in the first 6 to 12 months, whether it be compliance and admin and getting everything that you need in place, that it's really understandable that marketing and stuff like this can become an afterthought. So what I really wanted to do today really is just give you some really simple things that you can do and think about with your market positioning that can definitely give you a leg up. And they're not overcomplicated, they're very simple. So hopefully be able to provide some value from that aspect. So what is market position? Really, it's about differentiating yourself in a competitive market. And the best way to do this, and Sam actually touched on this earlier with some really, really good examples of how you can do this, is to specialize in serving a single target market. Now, a strong market position makes you the go-to choice for a specific audience. It's as simple as that. All right, Joe, you can flip that one for me, mate. The way I like to look at this, and look, there's lots of different ways that people will break down these kind of phrases, and there's a lot of buzzwords around personal branding and build your personal brand and all this. But what we're really talking about today is marketing and getting more leads and getting more business on your books. So what I like to think about this in market positioning from the market positioning standpoint. And there's 3 key pillars to this. Okay. So first up, choose a single target market, know exactly who you serve, and tailor everything to them. And there's lots of ways to do this. Like I said, Sam reeled off like about 60,000 in that 40-second video. And there's lots of ways to do it. It can be really scary though, and I'll touch on that in a little bit. Number 2 is then posting valuable content to that specific target market. So once you've identified who it is, obviously getting content out there. There's lots of different platforms you can do this on and lots of different modalities you can use. But the fundamental thing is produce valuable content that helps that person. And it should be a really good mix of what you know, which is knowledge-based stuff, who you are, which is more personal stories that can build a psychographic connection to the market, and who you help effectively, most niche specific and showing social proof when you finally get it. And then the third step of this is actually visibility. It's okay posting content. It's okay understanding who you want to see it. But if you're not actually building that audience, you cannot rely on an algorithm to put that content in front of that person. So we have to become the algorithm. And the way we do that is by actively connecting with your audience where they spend their time. And that might be LinkedIn or Instagram or social media platforms. And by the way, this is not just about social media and online. This can be taken offline as well. At the end of the day, market positioning can work everywhere. This can be social events and in-person stuff as well. So this is a really simple way to think about the 3 pillars of market positioning, and think about it like a 3-legged stool. If one leg's missing, it doesn't stand up very well. So they're the 3 things. And then next slide, mate. And what I'm going to do is quickly rip through 3 examples here of just really simple ways that you can niche down. Like, again, some reeled off loads of these earlier. Here's one example, right? We're going to walk through the 3 pillars and how it relates to 3 different examples. So here's Anthony. Single target market is industry specific. So he's got 20 years in engineering as a background. Makes sense for him to target engineers. And we've also built in a service element. So data driven, which speaks to the type of service his target market wants and desires. That's the single target market. Simple. We've combined 2 very simple things that are based on his history. Number 2 is what I just said. Valuable content, what you know, who you are, and who you help. Consistently with that, 3-4 posts a week. That's all you need to do. And then visibility is being active on socials, building connections, and in this instance, moving prospects onto appointments or booked calls. All right, next one, mate. Example 2, Matt here, his single target market, what we've really done is combined a unique aspect of his service. So he's actually got an accounting degree as well as being a mortgage broker, right? So not many people have got that. So he can combine these service elements together to create something very unique. And we've kind of branded him up as your personal financial concierge. So that's what we did there. Very simple. Again, it's based on his background, his experience. Nobody else can do that, just him. Number 2 is the same throughout this whole process. You'll see this is a common theme. Post content, what you know, who you are, who you help. And then visibility here, same thing. Be active on socials, build connections, and move prospects onto calls when the time is right. This isn't about being sales heavy or pushing people to do something they don't want to do. It's about being present when your prospects want you. Next one, bud. Last one I've got for you, single target market here. All we've done is paired together a location, which was Toronto, with a buyer type, let's call it, which is investors. So we've spoken to those people, helping Greater Toronto homeowners build wealth through smart mortgage and property investment decisions. So we're not going after first homeowners, we're going after investors. We're not going after Canada, we're going after Toronto. So there's some specifics there that can really help position Barshan in the market to success. Number 2, again, all we're then doing is posting valuable content, what you know, who you are, who you help, and then being visible, be active on socials, building connections. And then in this instance, we're actually just moving people onto a list, an email list. And again, lots of ways to do this, but that's where we can warm people up over time, add extra value to them. And eventually they're going to get on consultations and they're going to, hopefully, a percentage of them go onto your book. So yeah, they're the 3 examples. Just to show you how it actually works in practice, because look, I know theory is great, but it's for me, I'm someone who learns a lot better if I can see examples of how something's deployed. Why it matters for mortgage brokers, look, it differentiates you from generic brokers. There's 20,000 or so in Australia. I don't know the exact number, but there or thereabouts. The quicker you can build trust and authority and credibility with your audience, the more business you're going to get on your book. It helps attract inbound leads because they already see you as an expert and someone who's uniquely positioned to serve them. Okay, so if you're an engineer and you see Anthony's offer, you're going to be more drawn to book a call with him than someone saying, hey, I'm a mortgage broker who helps everyone. All right, and it creates authority and long-term business growth. So I'm not sure what the next slide is, Joe. Just show me the next one. Yeah, cool. This is perfect. So look, specialization beats generalization. Pick a niche and own it. Consistently provide valuable content to educate and engage. Stay visible and actively connect with your audience. And look, this isn't about logos or fancy websites, but in 2025, your stuff does need to look good. All right. Gone are the days, and this 5 years ago, you could put bad looking stuff out there on social media and get away with it. Gone are the days where your stuff can look trash. because AI and everything else that we've got now, your content needs to be written to a decent level. It doesn't have to be amazing. Your visuals have to be okay. Don't have to be world breaking, but they have to be good. So I think it's really important for people to understand that, unfortunately, right or wrong, people will assume that how you do one thing is how you do everything. So however you're showing up in the market, whether you want to call it personal branding or whatever, it does have to be professional. It does have to look the part. And the last thing I really wanted to say, which I've definitely noticed, is that it can be really scary to niche down. Whether you're a mortgage broker or whether you're coming from lots of industries that I've helped in the past, it's a shared theme that's very scary. And it is going to depend a little bit on the stage of business you're at. We're not here suggesting that if you're a brand new mortgage broker that you turn away a first home buyer because you're vigilantly sticking to only working with investors. That would be silly. You need the business that you can get at that point. So there's a time and a place, and there's usually seasons of niching down. But the idea of niching down is sometimes so scary for people because they think they're going to push a lot of business away that they never explore it at all, and that's really dangerous. So even if you're just going to explore it a bit, like target in a specific location that you're in, or you're going to maybe post content to first home buyers a little bit more often, it's worth exploring it probably from day one. I don't know if Sam would agree with that, but then there's definitely a time and a place where you would go really hard on that and think, you know what, I can really, really go to town on this one niche, and I don't mind pushing the rest of the market away. So you have to be strategic with it. It's very scary. It's totally normal to be fearful around this. Totally normal. Doesn't matter what industry you're in. But it's definitely worth thinking about early on, would be probably my final point on that. I think that's it, Joe, mate. I don't think I'll put another slide on there, did I?
No, that's it. And yet, look, you're dead right with that. Like, if I was a generalist in what I do, I wouldn't be sat here doing this now because I wouldn't need to try and add value. And yeah, like, what you were saying about stuff on LinkedIn, the most engaged post I've had was from last week. I put pictures out of me with the newborn baby and all that stuff, but the one that's gone down the most and had the most traction is just a true story that speaks to value and speaks to what I can give back and the issues that people have, can have navigating the job market and lending. But on with that, we'll move on to the Q&A with Sam. So Sam finds himself in a unique position, very successful broker, but he didn't actually come from a banking background. So we're going to tailor these questions. I mean, look, the background that you come from, it doesn't really matter. You're stepping into a whole new world at the end of the day. So everything that's really there is going to be relevant to anyone. But I have actually opened up to a Q&A in this actual meeting as well. So if anyone has any questions that they've just thought ad hoc that they want to ask, please free to jump in and add them. I just sort of went off what people have shared with me in the past. So are you ready to go, Sam? Are you good to go?
Mate, good to go. If everyone can hear me loud and clear, I'm ready to rumble.
We got you, mate. We got you. So when you stepped into broking, transitioning from, I think was you doing manual labor?
I was a spray painter. I worked in the special care industry
Nice.
From 15 to 25.
Nice. So what were your biggest challenges when you were transitioning into broking?
I think for myself personally, it was getting used to the new environment and not having done sales calls before. That was probably the first thing. When you're painting cars for a living, you don't particularly need to get on the phone and call anyone. You just need to paint the cars. So that was the biggest transition for me. It was made easier in the fact that I did go and work for a firm day one. And I got really lucky because I worked for a really good firm and I had a really good broker who mentored me. And it was a game changer very quickly, sort of set fire straight away.
Mm-hmm. What would you say the earning potential is really like? And is there any way that you advise people to really stabilize that earning early on in the journey rather than it being sort of up and down?
Yeah, it's a really good question. So there's tiers to this, right? There's basically tiers to the broker. So you've got your brokers that are sort of between 1 and 3 mil a month in settlements that might earn 10 grand a month or something like that, give or take, right? You're sort of stuck in that spot. You want to break through it. And when you've got brokers who are building a support team and still operating as a solo broker, and they're settling about 10 mil a month, sort of 60 grand circa in upfronts a month. You've got your expenses coming out of that, and then you're building the trail book in the background as well. And then when you've got your top echelon brokers that you work through, they're making millions. Do you know what I mean? They're making a very significant amount of money, the guys that are playing right at the top of the field.
My next question is, so if I'm starting out and I'm either going to go and work with an aggregator or I'm going to go and work with a brokerage,
Mhm.
I mean, let's do it from two angles. If I was going under someone else's business, what things am I looking for? Is it either a pagey or a comms, but working with somebody else? What should I look for?
I think the most important thing that you're going to look for is somewhere where you can really get a head start, where you're going to get taught, where you're going to train as a broker.
Hmm.
That's really important because that's going to set you up for the rest of the career. For myself personally, I worked 2 years for a brokerage and then I went out on my own after that 2 year period. But I could only go out on my own after that successfully because the people that I was working for were so good. The structure of the remuneration, I had a base salary and a 20% comp split at the start. And then it went to, when I was settling a certain amount of volume, just 50-50, com only. But by that stage, I was 6 months in. So there was a little bit of a pipeline. And then at that point, when you're bringing in enough of your own business, you can sort of go out on your own and take the lion's share of the income yourself. But it's the ability to work somewhere where you're surrounded by gun brokers, so you quickly become a gun broker rather than the remuneration structure itself, I find.
Hmm. All right, and let's say I mean, look, you'd be able to answer this because you've been a business owner. Let's say I'm a successful banker that a lot of aggregators will want to meet with me and have me come on as an agreement holder and register under their business. If you was going out and looking for an aggregator, what would you be looking for? What sort of things would you want to see in them?
I think with the aggregation models, I remain very agnostic to them. You want to see something with a good CRM, right? You
Hmm.
want to see something, a really good CRM, something with a high pass through of the comms, something with a lot of flexibility around your branding and your marketing, and something with a really large lender panel where you've got the options. You don't want to have a small lender panel and lose a deal to the broker down the road because they've got a lender option that you don't. That's super important. And then it's all that no sort of like and trust factor.
Yeah, I couldn't have said it better myself, to be honest, mate. Um, and what does a typical day look for? What does a typical day look like as a broker? Like what? I mean, I know every day is quite dynamic and changing, right? But give me a rundown on what the most average of days would look like.
I think it really depends on what stage of the journey you're at. So if
Hmm.
you're a broker that's really starting out, 85% of your efforts need to go into marketing. You should be doing everything that you can to generate leads. And like James was saying, there's so many ways to sort of skin the cat, but it would be a heavy marketing exercise because there's not a lot of deals on the table, there's not a lot of selling to do, and there's not a lot of delivering to do on the back end to get the deals done. As you get busier, there'll be more marketing, more sales calls, more packaging deals, getting them lodged, getting them approved, getting them settled. That's the sort of painful part, sort of between 2 and 6 mil a month. And then you start to get support staff and things like that. And when those things start to come into it, it becomes more heavy in marketing and a sales position because the back end's taken care of. And you find that as brokers grow, they'll do less administrative work on the back end and they'll do more, deal getting on the front end.
James has had a good question for you there. He says he's curious how do you balance how do you suggest people balance niching down in the early days while still trying to take what they can get, you know?
Yeah, this is really good. So the way I sort of split this is if it's early days and you need every deal that you've got to sort of put food on the table, you would take the deals that you get. All right. And you probably end up doing that a little bit over time. But when you're positioning yourself to the marketplace out in the open, you want to be positioning yourself to people that aren't in your universe that you serve a particular kind of niche. Right. So if you're working specifically with self-employed business owners that are buying investment properties and that's your niche, that's the place that that's the space that you play in. But you've got a friend of yours that's a first home buyer, that's PAYG, you're not going to turn that friend away. But all your marketing is giving off a distinct image of who I am and who I serve, if that makes
Hmm.
sense. Very few brokers have um, very few brokers get to the point where they turn business away because the business is not in their niche. They do that when they are oversubscribed with the amount of the business that they've got. Most brokers don't get to that stage, to be fair.
What's your
Uh,
guidance? What's your guidance for someone who, for a broker who is really worried that, let's say they're going to niche down a little bit. They really like working with first home buyers. Um, But they were speaking at a barbecue last weekend, and they were talking to an investor who might end up a mate of a mate who's looking for an investment property, who might end up being a client. And now they're petrified to post content specific to first home buyers and position themselves as the first home buyer broker because they're thinking about Frank from the barbecue, and which is a really real concern. It's something that my guys face as well, that we have to navigate. What's your guidance for those brokers in those situations?
There's, whatever the niche is, there is more than enough participants that fit into that niche for someone to build a very large business. It's not that there's not enough people in the niche, it's that they don't know who you are because you're not marketing enough.
Yeah. So don't worry about Frank. Don't worry about barbecue Frank, is what you're saying.
Don't worry about barbecue Frank. If you're the best at doing first home buyers, you're probably not the best at investors. There's probably guys that know things that you don't. And you can do Frank's loan, but don't worry if Frank doesn't come and do your loan. Worry about the next 10 deals that you're going to get. That's the angle that I would take.
Don't put the next 10 off from fear of putting Frank off. Yeah.
Correct. Because when you start putting out content that doesn't speak to any audience in particular, it just falls on deaf ears. It goes nowhere. I've seen guys that do it. They post heaps of generic content. They've posted it for years. They're like, Sam, content doesn't work. Your content doesn't talk to anyone. You're talking to this audience one day, this audience the next day, this audience this day, 7 days of the week, 7 different audiences. No one can follow along with that. No one can follow along with that. Where if you've done the same thing for 7 pieces of content for the one audience, you start to build a community. You start to build a following of people that know, like, and trust you because you're very good at the one thing.
Yeah, a little bit.
I don't know if anyone else is here, but we basically the chat is open if anyone wants to ask any questions. Those ones that I pulled out were just a sort of a selection of questions that people had sent over to me, and I just marked them down as the most popular ones. But the chat is open if anyone wants to ask anything of myself, Sam, or James. Bear in mind, I'm good at the recruitment side of things. Sam's good at the whole business side of things, and James is good at the marketing side. We're all valuable, credible, and what's the other word? What's the other one?
Trustworthy.
Trustworthy, yes.
Anybody who says that,
yeah.
you have to say it, they reckon.
Oh yeah. I might just put a video out later. Hi everyone, I am valuable, credible, and trustworthy.
Yeah.
But no, I had a job come through today, and it was for it was something to do with real estate and a buyer's agent, and I just said no to it because, it wasn't really in the strategy of my business,
I get it. And James, you're the same. You only serve mortgage brokers. I'm the same. Our market is just 20,000 brokers. That's it. Do you know what I mean? There's no one over and above that. There's millions of borrowers in Australia. So if you can carve a good niche out of 20,000 people, you can carve a good niche out of a pool of millions.
Mm-hmm.
Yeah. 100%.
Yeah, I'll give anyone who wants to come off mute and ask a question, or anyone wants to pop it in the chat. I'll give you the last bit of chance to do that.
Give it a mic.
I'm here, but
yes.
No, I'm good. That was interesting just about the structures, just about how you can potentially offshore some of the work, but I'm pretty comfortable with it. I don't really have any major dramas. It's just obviously you're saying lean in more on your networking or your social network to pull business initially, and then any external partners. What sort of arrangement would you maybe arrange with the partners? What sort of com split are you thinking? Is it 2,000 per mil if we get in 7,000? Or what happens about clawbacks if they refinance again after that? That's just the stuff I'm a bit cautious about.
Mm-hmm.
I've got a couple of answers on this. If you're happy, if you guys are happy for me to answer, yeah. So there's a couple of ways. There's probably 2 questions there, right? Who are the right referral partners, and 2, how do you remunerate them? Now, a lot of the best referral relationships that come together are not remunerated at all. Typically, if they are remunerated, you're probably looking at something around 20% as an industry standard. If there's clawbacks, you're probably going to wear that. So you don't want to get involved with someone where there's going to be a significant amount of clawbacks. But the best referral partners that you have look like this, Damien. I don't know how well you can see it. So let's say that you've got a particular client niche, right? And let's say that they are investors, right? They're investors that invest via their SMSF. Right, so really tight niche, right? They're property investors, could be residential, could be commercial, but it's all SMF stuff. Now, if you have over on this side here, brokers that specialize, if you've got a broker that specializes in investors that purchase via SMSF, to go to put together any sort of generic referral partnership with random people, random participants in the marketplace is not going to be that effective. But if you do it where you say you're working with, let's say, a buyer's agent that specializes in working with investors that buy properties via the SMSF, or if you work with a financial advisor who also specializes in helping clients buy real estate in SMSF, or if you're working with an accountant who specializes in that same thing, you're going to be able to add, as a broker, a shitload of value in that space to those referral partners, because it is a difficult space to play in, and most brokers aren't going to compete with you. And those are the best relationships where you can add a ton of value to them, and then they can add a ton of value back, rather than randomly picking referral partners out of the blue. So
yeah, gotcha. And then obviously if you secure the finance, you get your bit, the buyer's agent gets their bit. It's good for the client, for like the accountant and their client, so on. So yeah, I think I get you. Look, I come from an environment where I don't have paid referral partners anyway, but obviously I've got the brand behind me, so it's more so like I'm well known sort of in my area about like obviously send business to this guy. Obviously I'm not going to have that sort of back in, if you get me, as a safety net if I was to swap. So that's just something I was a bit curious about.
I already told you, you'd be good, man. When you get around to doing it, you'll
people
be good.
like, you should be a broker. They're like, I wish I found you 20 years ago. I'm like, I would have been in like year 7 or something. Do you mean?
Just a year 7 classroom writing deals on your desk. It's interesting because I've got an idea about the sort of banker to broker transition. You happy for me to sort of map it out a little bit for you, Joe? So it's really interesting that you say that. So what's happened, if you look back sort of 25 years ago, the entire market was bankers were writing loans, right? Yeah. And then you've had this sort of 25-year period that's been a dream run for brokers, and the brokers have essentially taken all the market share from bankers, right? There's 20% market share left. So you're at this point here now where you've got, and it's a massive trend now where you're seeing really high performing bankers, really good bankers becoming brokers at the fastest rate that they ever have. Joe, you can attest to that. You've been in the game and you've seen that. And this is the period that we are now. And then you get it to that point next is where essentially all or majority of the market share is via the brokers, and that's why the niche is so important. Because when you've got specialist brokers competing with generalist brokers, the specialist brokers are going to chip away at the market share of the generalist brokers the same way they did to the bankers over the past quarter of a century. So this space where we're playing now, this middle period, is where you're seeing a lot of really high performing bankers become mortgage brokers.
Yep.
Question, Sam. I'm hearing a lot of people saying to me, and I've always been a very positive, bullish person when it comes to anything, right? Hence starting a business 9 months, 4 months into being a dad. But I'm hearing a lot of stuff from brokers that have been in the game, and they're saying it's oversaturated. They feel like a lot of good brokers are going to leave the market. Like it seems like it's going to be on a decline. Like I think we're of the same ilk that we think it's just the beginning, right? But what I mean, I don't want to speak for you. What's your thoughts on that?
So if you look at your top 100 broke, look at that. I've texted shit stuff right when I needed it the most.
Over here, there's a lot of good brokers and there's a lot of not so good brokers. So probably the not so good will be washed out.
and this is what's happening, right? So the average age of a broker is mid-50s, let's call it, right?
Mm-hmm.
And it was the guys that came up in this generation where all you had to do was be a broker, compare NAB, Westpac, ANZ, and CBA against each other because it was quicker than for the person to go up and down the local shops and compare them all themselves, right? That's how it started, and then they started doing Bank West loans and all that sort of jazz. But when you look at the top 100 brokers in the country, all right, so you've got your top 100.
That's my business development list. I look at that a lot.
But you've got, right, 30% of your top 100 have been doing it for less than 5 years. 30% have been doing it for less than 5 years. And 70% of your top 100 have been a broker for less than 10 years. Now, it should be the other way around. It should be the longer that you're in the game, the better that you perform, but it's not the case. And that's when people say, oh, it's getting hard. It's because they're generalist brokers that aren't doing marketing, that aren't specializing in anything. They're doing it in an old-fashioned way.
Mm-hmm.
And the young guys are the ones that are taking up all the market share.
Mm-hmm. Yeah, and I notice, like, I'm chasing up businesses and they look, on the surface, they look great because they've got really built out websites. And then I'll speak to an older guy who's got a website that doesn't look great at all, but he'll have a massive loan book because he didn't need to rely on the website. His business was coming through on from him, right? And that's where you think it's going to go. You think that it's the younger brokers and the people coming into the game are going to be the ones that are going to take over in the next when that sort of thing you showing behind me there, when that starts to get clawed, the generalist, that's what it's going to be, the younger people niching down instead of being generalists like the older crowd were.
Yes, I think so. If you've got a broker that's doing 10 deals a month and he's doing 10 different sort of deals, and you've got another broker who's doing 10 deals a month and they're all exactly the same, they're going to get significantly better at that one deal than the generalist broker. And there's teams will be built around it. The systems will be built around it. They'll be faster. They'll be more efficient. They'll be more profitable. They'll have a better client experience. And then if you get that generalist guy who's playing everywhere, and then you've got the 10 other brokers that have got their one niche, they're slowly going to chip away at the generalists' deals one by one.
Because you lose credibility when you can't speak to people about things, right? Like for me, recruiting for brokers, I can speak to them because I'm inside the industry. Whereas if you're a broker that's only dealing with Medico, for example, after your conversations, you pick up on things, you pick up on nuances in conversation, things that are going to help the sale aspect before the delivering. Yeah.
100%. And it's the thing of like, the stats are the stats. The industry is not shrinking. There's more loans that are being written than ever. Do you know what I mean? So someone's writing those loans.
Yeah. So you just think that's the older brokers being a little bit pessimistic?
And I understand it from their perspective. Do you know what I mean? Complacent too. Yeah, they've got that loan book. And the loan books are getting chipped at away as well. Do you know what I mean? The loan books are getting chipped at away as well. Their clients are getting older. They're paying off the loans. Younger people are taking on debt. You know, you're not debting up at 60. You're debting up maybe at 30. Do you know what I mean? You know, I've seen young guys that are 6 months into it that are getting 50 leads a month because they're doing 5 TikToks a day, and they're just getting flooded with business. Where some of these older guys might get 50 leads a year. You know. Anyway,
if my business doesn't work out 3 years from now, my plan is I'm going to be the mortgage broker for YouTubers or Twitch streamers. I don't know how the money speaks to them. I don't know if it looks super advantageous to the banks on paper, but I think they'd be a good niche.
That's it.
Anyone else got any last questions? Thanks for jumping on as well, Damien. I reckon we'll say no. So, I mean, I booked in an hour. It didn't end up being an hour for the whole presentation, but we got through the hour. Yeah. So thank you for that, James. Thank you for that, Sam.
Happy to help, mate.
Yeah, thanks for everyone for joining as well. Again, apologies for the issues that we had last week. I hope it was good. I hope you got some good value from it. If anyone would like me to send over the slide deck as well, feel free to reach out via email. Thank you. See you
Cheers.
guys. See you nice, everyone. Have a good
Thank
night.
you.
Bye.
Bye.